Welcome to our exploration of mergers and acquisitions in 2024. Today, we'll dive into the key drivers behind this year's surge in M&A activity, including the impact of technology and market expansion. We'll spotlight case studies from major players, analyze the challenges companies face, and discuss how cultural integration can be a game changer. Plus, we want to hear from you. What trends do you think will shape the future of M&A? Stay tuned for insights that could influence your business strategy. 1. Introduction to M&A in 2024. Welcome to our deep dive into mergers and acquisitions in 2024. Today, we'll explore the landscape of M&A, highlighting its critical role in corporate growth and strategic alignment. As we stand at the intersection of economic recovery and technological innovation, M&A emerges as a vital tool for companies aiming to adapt and thrive in this dynamic environment. In 2024, M&A activity is on the rise, fueled by multiple factors, including a recovering economy, corporate cash reserves, and the ongoing influence of private equity. Resurgence reflects a strategic shift where businesses are looking to consolidate their positions and gain competitive advantages through strategic acquisitions. But what exactly are mergers and acquisitions? Mergers occur when two companies combine to form a new entity, whereas acquisitions happen when one company purchases another, taking control over its operations. Both strategies serve as catalysts for growth, enabling firms to access new markets, technologies, and customer bases. As we explore the M&A landscape today, we'll delve into the historical context, key drivers behind the current surge, and the transformative role technology plays in shaping these transactions. Additionally, we'll highlight major deals of 2024 and examine the implications of these mergers and acquisitions for various industries. Are you ready to uncover the fascinating world of M&A? Let's dive in. Historical context of M&A activity, 2020 to 2023. From 2020 to 2023, M&A activity experienced significant volatility, shaped by the unprecedented challenges posed by the COVID-19 pandemic. Initially, the onset of the pandemic caused many deals to be postponed or canceled, resulting in a dramatic drop in global M&A activity. According to Refinitiv, global M&A deals fell from $3.9 trillion in 2019 to $2.4 trillion in 2020. As companies prioritized survival over expansion during this uncertain time. As the world began to adapt to the new normal, M&A activity slowly began to rebound. By 2023, the market had regained momentum, reflecting a growing confidence among companies in their ability to navigate the evolving landscape. Key sectors such as technology, healthcare, and consumer goods saw increased M&A activity, driven by a desire for innovation and market expansion. This resurgence is not merely a reflection of economic recovery. It signifies a strategic pivot as companies recognize the importance of agility and adaptability in an ever-changing environment. The landscape of M&A in 2024 is built on the lessons learned during this tumultuous period, as firms look to leverage acquisitions as a means to enhance resilience and drive growth. 3. Key drivers of M&A resurgence in 2024. Several key drivers are fueling the renewed interest in M&A in 2024. Economic recovery. After the economic disruptions caused by the pandemic, the global economy is on a growth trajectory, projected to reach 4.6%, according to the International Monetary Fund, IMF. This recovery fosters an environment conducive to investment and acquisition, as businesses seek to capitalize on new opportunities and mitigate risks. Access to capital. Companies are sitting on record levels of cash, with over $2 trillion held in reserves across U.S. corporations. This financial flexibility allows firms to pursue acquisitions without relying heavily on debt financing. As companies prioritize growth and innovation, they are more inclined to utilize their cash reserves for strategic acquisitions. Private equity influence. Private equity firms are becoming major players in the M&A landscape, equipped with approximately $1.5 trillion in unspent capital. Their presence is driving competition for attractive targets, as they seek to capitalize on undervalued assets and high-growth opportunities. This influx of private equity capital not only elevates deal valuations, but also signals a broader trend of financial sophistication in the M&A market. These factors collectively create a fertile ground for M&A activity, prompting companies to rethink their growth strategies and explore the potential of mergers and acquisitions as a means to achieve their objectives. 4. The role of technology and AI in M&A. Technology, particularly artificial intelligence, AI, is reshaping the M&A process in transformative ways. The integration of advanced technologies has streamlined various stages of M&A, enhancing efficiency and accuracy. AI and due diligence. Traditional due diligence processes are time-consuming, often taking months to complete. However, AI tools can analyze vast data sets quickly, reducing due diligence time from months to weeks. This efficiency helps firms identify potential acquisition targets more effectively, allowing for quicker decision-making and execution. Valuation accuracy. Accurate valuation is crucial in M&A transactions, and AI enhances valuation models by utilizing historical data and predictive analytics. By assessing market trends and financial performance, AI-driven models provide more precise valuations, enabling companies to make informed decisions during negotiations. Integration processes. Post-merger integration is another critical area where technology plays a pivotal role. Companies can leverage technology to streamline processes, ensuring that acquired companies align with corporate strategies swiftly. Integration platforms facilitate communication and collaboration between teams, fostering a seamless transition and maximizing the potential of the merger. A notable example of technology-driven M&A is Microsoft's $10 billion investment in OpenAI. This strategic acquisition not only enhances Microsoft's AI capabilities, but also positions the company as a leader in the rapidly evolving AI landscape. As firms increasingly recognize the importance of technology in driving growth, M&A strategies will continue to evolve, reflecting the dynamic interplay between innovation and corporate strategy. 5. Major M&A case studies of 2024. Several high-profile M&A deals in 2024 exemplify current trends and strategies. Pfizer's acquisition of Seagen. This $43 billion deal positions Pfizer as a leader in oncology therapies, reflecting the growing demand for specialized healthcare solutions. By acquiring Seagen, Pfizer aims to enhance its cancer treatment portfolio and expand its reach in the competitive biopharmaceutical market. JP Morgan's acquisition of Renovite. In a move to bolster its digital payment capabilities, JP Morgan acquired Renovite for an undisclosed amount. This acquisition allows JP Morgan to enhance its technology infrastructure, ensuring that it remains competitive against fintech disruptors that are rapidly transforming the financial services landscape. Microsoft's acquisition of Activision Blizzard. Valued at $69 billion, this acquisition reshapes the gaming landscape, emphasizing the importance of content creation and immersive experiences in tech strategy. Microsoft aims to leverage Activision Blizzard's portfolio to enhance its gaming ecosystem, catering to the growing demand for interactive entertainment. These case studies illustrate the diverse motivations behind M&A activity in 2024, showcasing how companies strategically position themselves for growth in their respective industries. 6. The dominance of private equity in M&A. Private equity firms are increasingly prominent in the M&A landscape, targeting sectors that exhibit substantial growth potential. Their ability to leverage capital for acquisitions has led to increased competition for targets, driving up valuations in key industries. Trends in private equity acquisitions. Sectors such as healthcare, technology, and real estate are seeing heightened interest from private equity firms. These sectors are perceived as ripe for consolidation and innovation, prompting significant investments. According to PitchBook, private equity firms invested over $300 billion in U.S. buyouts in 2023, reflecting a robust appetite for acquisitions. KKR's acquisition of Clinigen Group for $1.3 billion showcases how private equity firms are focusing on healthcare as a strategic growth area. By acquiring Clinigen, KKR aims to enhance its portfolio in the pharmaceutical sector, capitalizing on the increasing demand for specialized healthcare solutions. The influence of private equity in M&A is expected to continue growing, as these firms leverage their resources and expertise to identify lucrative acquisition opportunities. Their active participation not only drives deal volume, but also shapes the competitive dynamics of various industries. Cross-border M&A trends. Cross-border mergers and acquisitions are on the rise, fueled by globalization, and the increasing need for businesses to expand their reach into new markets. Companies are actively seeking opportunities to diversify their operations and capture growth in regions experiencing rising consumer demand. Globalization has transformed the M&A landscape, providing companies with pathways to growth and diversification. As businesses look beyond their domestic markets, cross-border M&A allows them to access new customer bases and mitigate risks associated with relying solely on their home markets. For instance, according to a report by Deloitte, the number of cross-border deals reached a new high in 2023, driven largely by technology firms and consumer goods companies seeking to tap into emerging markets like Southeast Asia and Africa. There are several key drivers behind the trend of cross-border M&A. Market access. Companies pursue acquisitions to gain immediate access to new markets, particularly in developing economies where consumer demand is growing rapidly. For example, multinational corporations are increasingly acquiring local firms in countries like India and Brazil to leverage their established market presence. Diversification. By entering foreign markets, companies can diversify their portfolios, reducing exposure to domestic economic fluctuations. This strategy is particularly appealing in uncertain economic climates. Resource acquisition. Cross-border M&A also allows companies to acquire valuable resources, such as talent, technology, and intellectual property. For instance, tech firms often acquire startups in other countries to gain cutting-edge technologies and innovative capabilities. Challenges of cross-border M&A. While the opportunities are substantial, cross-border M&A also presents unique challenges. Regulatory hurdles, cultural differences, and integration issues can complicate these transactions. According to a survey by PwC, nearly 50% of executives cited regulatory challenges as a primary concern when pursuing cross-border deals. Let's look at a case study to illustrate this trend. In 2023, the German pharmaceutical giant Bayer acquired the American biotech firm AskBio for $4 billion. This acquisition enabled Bayer to enhance its gene therapy portfolio and expand its reach into the lucrative U.S. market. The deal exemplifies how companies are leveraging cross-border acquisitions to innovate and grow in competitive environments. As we move into 2024, several trends are expected to shape the future of cross-border M&A. Increased focus on sustainability. Companies are likely to seek acquisitions that enhance their sustainability profiles. This trend aligns with global demands for corporate responsibility and sustainable practices. Technology-driven acquisitions. The tech sector will continue to dominate cross-border M&A, with companies looking to acquire innovative startups that can drive digital transformation. Emerging markets growth. As consumer bases in emerging markets expand, companies will increasingly turn to these regions for growth opportunities. Analysts predict that Africa and Asia will see the most significant influx of cross-border M&A activity. In summary, cross-border M&A is a dynamic and evolving landscape. As globalization continues to break down barriers, companies must navigate the complexities of international business to seize growth opportunities. By understanding the key drivers and challenges, businesses can strategically position themselves for success in the global marketplace. 8. Energy and ESG-focused M&A. The emphasis on environmental, social, and governance (ESG) factors is increasingly influencing M&A activity in 2024. Companies are not only focused on financial returns, but also on sustainable practices that resonate with consumers and investors alike. Importance of ESG criteria. The integration of ESG principles into M&A strategies reflects a growing recognition that sustainability is a critical driver of long-term success. Investors are prioritizing companies that align with their values, pushing firms to consider the environmental impact of their acquisitions. Case study: BP's $1.1 billion acquisition of ChargeMaster exemplifies the shift towards sustainable energy solutions. This strategic move not only bolsters BP's presence in the electric vehicle charging market, but also aligns with its commitment to reducing carbon emissions and transitioning to renewable energy sources. Moreover, companies across sectors are incorporating ESG due diligence into their M&A processes, assessing how potential acquisitions align with their sustainability goals. This trend underscores a broader cultural shift toward responsible business practices, emphasizing that profitability and sustainability can coexist. 9. Challenges and risks in M&A. Despite the optimism surrounding M&A activity in 2024, challenges and risks loom large. Companies must navigate a complex landscape of regulatory scrutiny, geopolitical tensions, and integration challenges that can derail even the most promising deals. Regulatory scrutiny. Antitrust concerns are more pronounced than ever, especially in industries dominated by a few major players. Regulators are increasingly vigilant, scrutinizing mergers that could stifle competition. The Federal Trade Commission, FTC, has ramped up its enforcement efforts, leading to a higher rate of deal rejections and increased compliance costs for companies pursuing M&A. Geopolitical factors. Geopolitical tensions, particularly between major economies, can also impact cross-border M&A activity. Tariffs, trade restrictions, and diplomatic relations influence companies' willingness to engage in international transactions. The ongoing trade tensions between the U.S. and China have created uncertainty, prompting companies to reconsider their M&A strategies. Integration risks. Post-merger integration is another critical aspect that can determine the success or failure of an acquisition. Companies often underestimate the complexity of integrating operations, cultures, and systems. Successful integration requires careful planning, effective communication, and a commitment to aligning goals and objectives across the newly combined entity. In conclusion, while M&A activity is thriving, navigating these challenges is essential for companies seeking to capitalize on growth opportunities. A thorough understanding of the regulatory landscape, geopolitical dynamics, and integration complexities will be crucial for ensuring successful outcomes. 10. The future of M&A, predictions for the next decade. As we look to the future, the M&A landscape is poised for continued evolution. Several key trends are expected to shape M&A activity over the next decade. Increased focus on technology. The role of technology in driving M&A will only intensify. Companies will increasingly seek acquisitions that enhance their digital capabilities, enabling them to stay competitive in a tech-driven world. We anticipate a surge in deals related to artificial intelligence, cybersecurity, and data analytics as companies prioritize innovation. Sustainability as a core strategy. The emphasis on sustainability will continue to influence M&A decisions, with firms seeking acquisitions that align with their ESG goals. Companies that prioritize sustainable practices will not only enhance their reputations, but also attract investment from socially conscious investors. Continued globalization. Despite the challenges posed by geopolitical tensions, globalization will remain a driving force behind cross-border M&A. Companies will seek to expand into emerging markets, capitalizing on growth opportunities and diversifying their operations to mitigate risks. Collaboration over competition. In an increasingly interconnected world, collaboration may become a preferred strategy for companies seeking growth. Partnerships and joint ventures could complement traditional M&A as firms recognize the value of shared expertise and resources. In summary, the future of M&A is bright, characterized by innovation, sustainability, and collaboration. As companies navigate this dynamic landscape, their ability to adapt and seize opportunities will determine their success in the years to come. In conclusion, mergers and acquisitions in 2024 are defined by robust activity driven by economic recovery, technological advancement, and a heightened emphasis on sustainability. As companies navigate the complexities of the M&A landscape, their strategic choices will play a pivotal role in shaping industries and driving innovation. Today, we explored the historical context, key drivers, major case studies, and the challenges that companies face in the M&A realm. The interplay between technology and sustainability will continue to redefine how businesses approach mergers and acquisitions, emphasizing the importance of agility and adaptability. As we move forward, it's crucial for companies to stay informed about the evolving trends in M&A and to proactively assess their strategies in this dynamic environment. The future holds exciting possibilities for those willing to embrace change and capitalize on new opportunities. Thank you for joining us on this journey through the world of mergers and acquisitions in 2024. Stay tuned for more insights and updates on the latest trends in the business landscape. If you found this video insightful, don't forget to hit that like button. It helps us reach more people like you. And if you want to stay ahead of the curve on the latest business trends and strategies, make sure to subscribe and turn on the notifications so you never miss an update. We'd also love to hear your thoughts. What trends do you think will shape the future of M&A? Drop a comment below and let's get the conversation started. Lastly, if you know someone who could benefit from this content, share this video with them. Let's grow together and keep learning. Until next time, stay informed, stay ahead.